Hey everybody, welcome back to the Encrypted Capital recap for Wednesday, January 27th. First off, we got Bitcoin dipped below $30,000 today, down 15% for the week. We got Ethereum down approximately 4% for the day. And we have Polkadot in fourth place, which overtook XRP not too long ago. That's down about 5%. And we got XRP down about 5% for the day as well. So let's get right into the headlines here. We got Bitcoin price drops under 30K as moment of truth arrives, says trader. Bitcoin price action mimics recent lows, but traders are all focused on GameStop and the power of crowd investment. We saw the other day that GameStop completely took off and went parabolic. Bitcoin retested the $30,000 support on January 27th as a day of losses culminated in violation of the psychologically significant price level. So yes, 30K, it definitely dropped below that. Data from Cointelegraph Markets and TradingView showed any bullish momentum left in Bitcoin dissipate on Wednesday after rejection at highs near $33,000. So we've been anticipating a pullback in Bitcoin as it basically just went parabolic this year. And so now we're seeing a little bit of a pullback. And in my opinion, now is some of the greatest times to buy when no one's talking about it or they are scared or feared. And so the next article I have is Scaramucci says the GameStop saga is positive for Bitcoin. It says the growing number of retail traders sidestepping Wall Street to power rallies in stocks like GameStop Inc. points to a positive backdrop for Bitcoin, according to Skybridge Capital's Anthony Scaramucci. That's because the phenomenon exemplifies financial decentralization, the guiding idea behind Bitcoin, he said. Smartphones and low-cost trading are democratizing the formerly insular and highly concentrated business of money management, he added. Skybridge has an overall Bitcoin exposure of around 385 million. The activity in GameStop is more proof of concept that Bitcoin is going to work, Scaramucci said in an interview. How are you going to beat that decentralized crowd? That to me is more affirmation about decentralized finance. And we all know that decentralized finance has essentially taken the role of what ICOs or initial coin offerings were doing in the previous bull run. Now all the hype is about DeFi, and we have the ability to now stake your coins inside your Ledger wallet, such as Tron or Tezos. And now you can turn that staking of the coins into an interest-bearing account, essentially. So you can earn money just for holding those coins in your wallet, which is pretty crazy. You're essentially turning yourself into your own bank, which crypto is essentially already used for. You want to become your own bank by holding your own keys and holding your own crypto. And now, just by holding that crypto, you can make money on doing just that, which is amazing. So you can turn yourself into your own bank. And speaking of banks, we have banks, not Bitcoin, in Australia laundered $387 million for Latin American drug cartels. And we know Christine Lagarde was coming out the other day saying that Bitcoin was up to some funny business and it was used to launder money. And we all know that the banks launder the most money out of anybody. And this here is just proof, $387 million. It says Australian financial institutions laundered $387 million for Latin American cocaine cartels, according to a new report. The Australian Financial Review says that the money laundering web spanned several continents, including South America, where the hard drugs were obtained, North America, where the drugs were sold, and then Southeast Asia, where the proceeds from drug sales were received in bank accounts. It says in Australia, the cash was layered through various bank accounts before the trade-based money laundering phase kicked off. The report reveals that every year between 2014 and 2017, over $77 million passed through the Aussie banks. And once in Australia, the money was used to purchase electronic items such as laptops, gaming consoles, smart devices, digital cameras, and other electronic gadgets. So there you have it. I wonder if Christine Lagarde is going to say anything about this. Next, we have a Bitcoin held by public companies has surged 400% in 12 months to $3.6 billion. Public companies hold more than $3.6 billion worth of Bitcoin, technology research Kevin Rook found. And he goes on to say last year, public companies held fewer than 20,000 BTC on their balance sheets. Today, 19 public companies hold 105,837 Bitcoin on their balance sheets, valued over $3.6 billion. And it goes on to ask, why is institutional demand for Bitcoin surging? It says in a year, public companies alone accumulate around 85,000 BTC, which is equivalent to $2.67 billion. And we know that Grayscale, they just started out their assets under management at the beginning of 2020 with roughly $2 billion, and they've increased their position to roughly $24 billion, which is insane for just a 1 year gain. You're looking at about a 12x return. Says this trend is indicative of the rapidly growing institutional demand for Bitcoin, as portrayed by the surging trading activity on Grayscale and CME. In Grayscale, we know that they own approximately 3%, or so they say, 3% of all Bitcoin floating around, which is absolutely insane. You have some very, very big whales playing this game. And so if you can, you'd like to swim with the whales and not become whale food, which means do not buy when everything is green. For example, a day like today, everything's completely red. Today might be a day that you would want to consider looking at some assets that are extremely undervalued and get them on a discount, but that is not financial advice. Ripple, they face a new class action lawsuit over unregistered XRP sales in Florida. I thought this was hilarious because of the amount this guy was suing over. It says a new class action lawsuit has been filed against Ripple, its CEO Brad Garlinghouse, and its subsidiary XRP2 LLC. The case alleges that the defendant sold millions of dollars or more of XRP without registering it either with federal or Florida authorities. A new class action lawsuit has been filed in the Middle District Court of Florida on Monday. The case alleges that the defendants sold millions of dollars, and on numerous occasions, defendants made public statements claiming that XRP was not a security when in fact it is. Although, how can it be a security when if you buy the currency XRP, you do not actually own any of Ripple Labs? That would mean that it is not a security, since if Ripple, the company, completely went away, XRP currency would still be able to be used and would not go away, which means it is not a security, which means all of these lawsuits are going to get wiped clean and it's not even going to matter because they're going to deem XRP not a security since no one owns any share of Ripple for the XRP that they own. It says the lawsuit is filed by Tyler Toomey, a resident of Florida. Toomey claims that he owned 135 XRP in November 2020, worth about $100 at the time, and sold it in 2 transactions in December 2020 at a loss of about 50%. What an idiot. He doesn't deserve to get any gains at all, and why would you sue over a $50 loss? It makes no sense. In other Ripple news, Ripple's XRP remittance product powered $2.4 billion in volume in 2020, says senior executive. RippleNet General Manager Ashish Birla says the company's XRP-based payments platform called On-Demand Liquidity, or ODL, processed billions of dollars in volume last year. Birla says RippleNet, Ripple's institutional payment provider network, had a strong 2020 as it powered around 3 million transactions while expanding to 18 new countries and signing 15 new deals, even after the US SEC filed a complaint against the San Francisco startup. In a tweet from Ashish Birla, he says, "We processed $3 million transactions on RippleNet in 2020, and ODL is rapidly growing. ODL transactions accounted for $2.4 billion in notional value. We planted the RN flag in 18 new countries and signed 15 deals after the SEC complaint was made public." Like I said, price manipulation at its finest. You guys can go back and see some of our previous videos where we examined exactly how CNBC told you to buy XRP Ripple at the very top. And in my opinion, this SEC stuff is just more price manipulation. You definitely want to be buying when no one's talking about it. You definitely want to be buying when everybody's scared. That is when you will get the best return on your money from my experience. And so don't take my word for it, do your own research. But there are very simple ways that you can multiply your money. And some of the best ways to multiply your money is to buy assets that are undervalued, wait for them to go up in price. They start going up 50, 100, 2, 3, 4, 500% or more. Scale out of your positions, take that profit, invest it into other assets that have not moved up yet, especially some of the big players. We know that Dash is one of them. Bitcoin Cash is one of them. We have Tron that's been in a range for quite a while. All of these coins have value, in my opinion. And if they're undervalued because they have not pumped yet, but you do have other assets that have, that is the easiest way to multiply your money. you can go ahead and leverage your positions because the coins that are green today are not going to be green tomorrow. And that's where you can really take advantage and leverage your positions. If you invest $1,000 and you turn that into $3,000 or $4,000, don't sit in that coin, at least not your entire position. Maybe you want to sell 10, 20, 30, 40, 50, 60% of that position and go ahead and get yourself another asset that has yet to make a move. And that is, to me, is the easiest way to multiply your money. Or if you're just a long-term holder, don't even worry about doing any of that stuff. It can get easy to get caught up in over trading, and so definitely don't do that. But if you're familiar with the markets, I've been doing this for roughly almost a decade now, and that's how I have found it to work best for me, is to sell what's pumping, buy what's not. Do not sell what's not pumping to buy what has pumped. You will get wrecked. You will lose your capital. I see it happen over and over again. Friends calling me, hitting me up if they should get out of this asset and go into another asset. That's definitely not what you guys want to be doing. You want to have a basket of assets, and then you want to sell portions of them to buy other assets that have not moved, and you can really increase your portfolio at a drastic rate if you decide to do that. Otherwise, just hold and buy the good assets, buy assets that have utility, and you will be in good shape. All right, next up, Dutch Bitcoin exchange drags central bank to court over KYC rule. One Dutch Bitcoin exchange has taken legal action against the central bank over its controversial crypto wallet verification law, which is where they want to essentially know from the exchanges if there is a transfer that is made to a unregistered wallet of more than $3,000. The exchange has to file and let them know who that person was. It says Dutch Bitcoin exchange platform Bitonic has filed a preliminary injunction at a Rotterdam court seeking the suspension of a wallet verification rule enacted by the central bank back in November 2019. So it'll be interesting to see how this stuff all plays out. Obviously, like I said before, this defeats the whole purpose of crypto, remaining anonymous, becoming your own bank. I do not think that the powers that be want that. And so it looks like they are doing everything they can to make sure that they know who you are and how much money you have. So goes on to say that the Bitonic announcement reads, our objective is to be able to quickly halt the comprehensive processing of personal data imposed on us. We want to return to the situation where we ourselves determine on a risk-based basis whether we ask the customer to provide his management of the wallet. 2 thumbs up for them. I completely agree. It's good that they are fighting back against this. And so hopefully this KYC rule will not go into effect, and we'll keep an eye on it. So last but not least, last but least, Bitcoin Maxi Pomp launches crypto jobs board with Gemini, Coinbase, and BlockFi. It says Morgan Creek's Anthony Pompliano aims to list 10,000 openings by the end of the year. While I'm not a huge fan of Pomp, I did think it was worth noting for anybody who's looking to get a job in the crypto space. This may be a route that you want to go. It says popular crypto evangelist and partner Morgan Creek Digital is launching a blockchain-focused jobs board with backing from Gemini, Coinbase, and BlockFi. It was announced Wednesday, and it went live with over 100 open crypto positions advertised by its 3 partners. So interesting idea. I think it's cool that they're doing that to get people involved in the space and bring on some new, fresh talent to their companies. Hopefully that extends to other crypto companies. I'm not sure exactly how that's going to work, but nonetheless, good for them for trying to help people get some jobs. And with that being said, I think that's going to do it for this edition of the Encrypted Capital Recap. So if you guys like what you heard, please drop us a like, comment, you know the drill, and we will catch you all in the next video.